Good Thursday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, all the way from the city of brotherly love, Dimitri Parkovanik. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for. There's the disclaimer.
Excellent.
And I am going to share my screen. As I'm doing that, if you're joining us for the first time, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, the analytics. If you have a question, type it into that live chat on YouTube. Will's watching it. He'll read it back to me. And to give you guys a couple minutes to type in those questions, we're going to take a look at the pre-market report, see if we could get insights what's trading in pre-market hours, and then we'll move on to the questions. All right. So this report here, it's on the stocks that are trading in the pre-market hours, and we have a calendar view up top, and that does allow you to go back in history. And if you wish to click on a historical date, you could see what happened in the pre-market hours on that date. We show the data for the last week, and this from a high level. This allows you to kind of just eyeball and spot if there's anything unusual or any type of trend going here from February 9th to the 15th. Today we're on February 15th. So far, we have 677 stocks that are trading higher in the pre-market, 310 stocks trading lower. As far as volume goes, we have 237 million shares trading on up volume versus 51 million on down volume. And if we convert that volume to dollar value, we have $4.2 billion worth of stock trading higher versus $1.5 billion worth of stock trading lower. So from this perspective, it looks like the trading so far in the pre-market hours has a bullish lean. But we could take a look at it from a couple more perspectives, and then we'll move on to the questions. I'm going to slide down this page, and now we see a list of stock symbols with stock prices, percentage changes in the pre-market hours, volume, alerts. The list is divided into the most active stocks, our biggest percentage gainers in the pre-market, and our biggest percentage decliners. Here I see 135 stocks made it onto our biggest percentage gainers list, 57 on our largest decliners list. So from this perspective, it looks like, again, the trading in the pre-market hours has a bullish bias. Now, to make this list, we do set certain thresholds because stocks in the pre-market hours could have very low volume or they could be liquid. So we do put liquidity, volume, price change thresholds in there. And as long as the stock's trading in the pre-market hours and listed on a major U.S. exchange and meets those thresholds, it can make it onto this list. It could be a small cap stock. So we see here market caps. A lot of them are small cap stocks. Could be an ETF. Could be a leveraged products. It could be an inverse product, a closed-end fund. And to narrow down this list to a smaller group, we could use the filters above. So this first filter, if you have a watch list and you save the group of stocks that you follow and you're interested to screen using this report, you could use that filter, drop it down. It'll show you the watch list that you saved, select your watch list, and the report will get screened or filtered by those stocks in your watch list. We're going to use this filter here in ETF. I'm going to drop this. I'm going to click on this filter. We get a drop-down menu to select from. And these are different ETFs. Let's select the first one, SPY, which is the S&P 500 ETF. When we do that, the list below gets filtered by stocks that are holdings in the SPY ETF, which are the S&P 500 constituents. And here we have 10 stocks that made our biggest percentage gainers list and 9 on our biggest decliners list. So that's a little bit more balanced, a little bit more even. So that shows us a mixed bag. The previous two metrics pointed to a more bullish bias in the pre-market trading. So I gave it a couple minutes. I think I'll take questions now if you have them.
No real questions, D. We did have, and I'm kind of looking at the IV. We did have one of the chameleons put a trade on in MANU yesterday. Looks like the IV was up. I can't tell why, what news, but it's down in the pre-market. I don't know if you want to look at the trade or not, but they're chatting about it on the. There's no real question about it.
Okay. I mean, if there's no question about it, I wouldn't know.
All right.
What to answer.
Yeah, there is no question.
If there's a question, yeah, I'll take a look at it. Otherwise, I don't know what to look at then at that point.
All right. Cool.
Yeah. Let me navigate to SPY. That's my default symbol when we don't have questions. And let's hit upon under options the new tool, our multi-leg trades analyzer. We've been talking about it for a couple of days now, and this looks at the trades in the options that are multi-leg, part of strategies. The software compiles them, organizes them, prepares them for analysis, runs them through software to create this report of the different strategies that traded yesterday. And this one is an SPY that we were looking at. And we could see here that the top one, it's right now sorted by the strategy that traded the most contracts. Okay, so you can see here the top one's 84,000, next one's 34,491, 20. So the top one by far, traded a lot more than the second one, third one, and then if we go down the line, you could see they drop. SPY, anyway, these are pretty significant volumes in SPY, but let's come back to this first one. So here what we see is that this trade, 84,100 contracts, traded 9 different times. When I click on it, it opens up, and here are the 9 different times that it traded. It started after 4 o'clock, 4:02:38 was the first trade. So see over here, this tells us 4:02:38 was the first time we picked up on the day yesterday that this traded, and it traded more than that one time, traded actually 9 times over here. We see it. The last one was 4:07:49. So in that 5-minute time span, right, it traded nine separate times for the total contract volume was 84,100. And if we go down here, we kind of can see that at 4:02:38, 13,068 contracts traded, right, on the Amex. So if we open this up, there's the supporting data. So it sums it up for us here. But you could see here, there's 470 put, 475 put, traded twice here. all the volume up here. And we could see here that the trade price of that spread was 56 cents. Okay. The market at that time for that spread was 49 cents, 56 cents, leading us to believe that somebody was trying to buy that spread from the dealers, right? And here we could see the first one traded on the Amex, right? If we open that up, here you go. These are all the details over here on the complex order book. Then it traded again a second later, again at 56 cents. And then you could see here, it traded multiple times here. Another second later, traded at 55 cents. So this is probably because the stock was starting to increase and they were just trading it at a little bit lower price. And the last price was 53 cents a hundred. So this organizes the data for us. If we want to go down and look at it at a deeper level, okay, we could see what the markets were. We could see where the stock was at the time, what exchange it's traded as, and what this is letting us see is that after the Amex, which traded quite a bit, then the rest of it, he went to, or this trade went to different exchanges. It didn't all get filled on one exchange. It looks like once he took out the liquidity, or the dealers, the specialists, the market makers on one exchange, it's possible then he went on and said, okay, let me go to the next exchange that has different dealers, different specialists out there to see if they're interested. And this is kind of how it progressed. Went to C2, CBOE, Philadelphia Stock Exchange, and even on the Miami Exchange, it traded as well. So the conclusion here is it was a big put spread that traded all the way up at after 4 o'clock, and he needed this trade needed to access liquidity on multiple exchanges. What's also interesting is that you could see that the dealers on all the exchanges, were willing to trade this. So for them, it had a theoretical edge. The dealers believed that this was a good trade, and they were willing to, maybe not completely. They filled them on one exchange, but it does show that dealers on the American Stock Exchange, the CBOE, the Phillips, the MIAX, we got to assume they're different dealers, actually were willing to trade to do the other side of this trade. Okay, so they felt like this was a good enough price to take the other side of the trade. Think of it as like, if somebody was trying to put on I shouldn't be using casinos as bad because I don't own them, but just for lack of a better comparison analogy, imagine like somebody wanted to put on a big bet on a football game, but one casino was only willing to make that bet, but to a certain amount. So the person had to go to 3-4 different casinos to say. So the casinos thought it might be a good odds, but they were only willing to take that bet up to a certain amount, right? 10,000, 100,000, So then he had to go until they moved the odds. So think of it like that. Okay, if we're looking at it this way, this is what the inference is from what we're watching here, right? Because this all happened from 402 to 407.49, and pretty quickly, actually, most of it was from 402 38 seconds to 402 40 seconds. This, I don't know what this last one was, at the end over here. Like it could be a part of it, or maybe somebody tried to piggyback or something. Because it's an odd 100. So that's kind of like the inference looking at this particular data and this table. All right. Now we could come up here. Actually, let me stay up here. And these are the 9 different times. So we see traded 84,109 different times. And even on, like, say, the SIBO, here's on the SIBO, if we open it up, you could see that even in this instance, it was on a complex order book. Looks like, got hit multiple times, not on one trade, but multiple times. So we summed that up for you guys. This is the put spread. So the put spread is April 19th, 470, 475. To make it easier, well, April 19th, how far away is that? So that's the days to expiration, 65, right? That means it's not expiring tomorrow. It's not expiring, the next day. It's more of a long-term outlook that this is like, today, it's not something that this person is doing because, it's an immediate 0 DT or tomorrow, or whatever. This has 65 days to go, so it's still a long way out. And the spread, 470, 475, it's a $5 put. So just to make it easier, we put that $5. I mean, it's easy to do that in your head, but if you have a lot of them, if you're looking at a lot of them here, it's just easier looking at it this way. Okay. So that's what these indicators are. Okay. These are the legs. This is identifying the spread, days to expiration, and the spread between the strikes. Then we have this indicator H6. And, I didn't know what a better way to indicate, I might change that, maybe to D6 or something. But what does that mean? Well, this is saying that we went back into our historical database, that right now I think we're still filling it up back. This is a new tool. So I think we're like so far 10 days back, or, I forget how much, but in those days, we see that this spread traded six different days, like this exact same strategy, April 19th, 470, 475 as a multi-leg trade. All right. So that's what we detected. And it could be by chance, it could be related. We don't really know, but we could take a look at that data and say, okay, 6 different, does it trade every day? The question is, does it trade every day like this, or every other day, or every third day, where after the market closes, is there some kind of pattern or trend or something that we could spot by looking at that history? Or maybe it traded a while ago and this is closing. So maybe we could get some more clues by looking at how this traded historically, right? So this is this tab here, historical 6. See here, 6 days, 6 days. So let's click on that, and here we go. And hold on, let me sort this by most recent. Okay, so this is yesterday's, February 14th. We didn't open yet, so we don't know what's going on today. This is up top is yesterday's 84,000, and then here are the historical dates that we detected the same spread. February 13th, February 12th, February 9th, February 8th, February 7th, so almost something here is, maybe it's a coincidence. I don't know, but so far we're seeing, some trading in this spread almost every day going into our recent history, right? From, I think, February 9th and February 12th, there's a weekend there. So these would be, almost from February 7th, 8th, 9th, almost every day we see some trading in this spread. But the volumes look different. 84,000 is way higher than, we have 126 times it traded February 13th, 1,290, 2,900. So these are, only 2 traded on February 8th. So I don't know. I mean, it is trading every day. We don't know somebody feeling this out, not making sure that this could be something that just by chance, more people found this interesting.
Hey, D,
Yeah.
we did have a couple questions. First, Jackie, who just came back today, he was asking, I have one question. Why some individual stocks only have multi-leg trades, no single leg trades?
I mean, I'm not sure what that, if you tell us which stock, I'll take a look.
I mean, this report would show single leg trades as well, correct?
No.
All
So
right. So
it's
this
important
report,
to
Jackie,
understand.
will not show single leg
Yeah.
trades. Yeah,
This here specifically is multi-leg trades
that's
analyzed.
all right.
Yeah.
Well,
This is
that answers the
this
question,
yeah.
Jackie. Yeah.
Keep in mind this is specifically multi-leg trades. That's it. This will filter out any single leg trades just to look at multi-leg trades. Single leg trades are over here. Okay. So keep in mind specifically multi-leg trades. That's what we're looking at. That's the focus of it.
And this, again, so everyone knows, this is not something that's reported by the exchanges. This is I mean, Dimitri's worked on this for over a year. This is a
Yeah.
technology that's being created, call it AI, call it an algorithm, whatever, that goes through and puts these trades together. And then Dimitri, through this algorithm, is reporting them to you. So it's
Right.
quite a process.
So what we're seeing here organized, this is our software organizing the raw data to come up with the interpretations of the strat. Right. When you enter in a trade, even if it's a put spread or butterfly, whatever it is, the trade tape doesn't report it that way. It doesn't
Each
say
leg's reported just as a trade.
it just reports the legs as a trade, and then you have to take that data and stitch it together. Right. So it's not reported as here's somebody with the put spread here. It looks, well, I showed you guys the raw data.
Yeah, we did have a direct question to this report, D, from MW. He was asking, NVDA had some interest in, he's obviously using the tool, multi-leg trades yesterday, call butterflies, lots of them, and way in the money. Maybe Dimitri could look at these and see if there's an explanation.
Okay, so let's take a look at, all right, so I'll navigate to that then. Since we have, so the question was NVIDIA.
Yeah.
Okay, let's go to NVIDIA. So here's NVIDIA. And keep in mind, these are the different strategies we detected, right? A whole list, like, so you could see there are lots of them, right? Lots of different strategies. And within those strategies, there are different unique combinations. Even the call spread here, that traded 90,566 contracts out of all the volume in NVIDIA, those were involved call spread. And there's 1,603 different combinations. What does that mean? Well, you could do a call spread in one expiration or a call spread could involve different strikes. It could be a $5 call spread, $10 call spread, right? So keep in mind, there's like many different strategies here. And you could filter. This is a filter. If you click on it, that's what will come up. Let's just stick to the top one. These right now are sorted by the one that had the most contracts. Okay, so the top one is a call butterfly. So here we go. Between 9:31 and 40 seconds AM, so almost right away when the market opened, right? Almost 1 minute 40 seconds. The call butterfly. This call butterfly first traded, and it looks like there are lots of time. It traded 2,234 times yesterday. So we could see here the last time we saw it was 10:07:40. So for over a half hour, this call. Hold on a second. Right. So this about, so keep in mind, this is a new, we just published this like Tuesday. So we're still getting some bugs in there that we're fixing. I think we, we've actually been like pretty hard, fixing, working in the background, fixing these bugs. So here's the call butterfly. Total contracts 9,704. Right. It was done by 10:07:40. We didn't see any that this particular spread traded again. What was the spread? Well, the call butterfly, it's a January 17th expiration. Again, in my head, 2025. Again, it's hard to say in your head how far away that is, right? At the time of the trade. So for convenience, we put the DT here. So it's 338 days to expiration. As you could see, it's 2025. Right now we're in 2024. So far away, right? What was the spread? 185, 190, 195. How does the butterfly work? Right? It's 1 by 2 by 1. Buy one call, sell 2 in the middle, buy the next strike call up, or the reverse of that. Sell, buy 2, sell, right? So the ratio of the amount of calls you buy and sell are the same, right? You're buying 2 and selling 2. Now it's easy to figure out, okay, how far away these strikes are from each other. You can see it's $5. That's what this is, $5. But again, if you have a lot of them up, it's just easier as a reference. That's why I put this here. All right. So if I had a bunch of call butterflies, so there's 138 butterflies yesterday that traded. See that I filtered it out? Look at all these call, but February 16th, 74, 760s. So you could see some are $5 apart, some are $10 apart. This is $200 apart. The 900, 1,000, 100, 1,300. And you can see this is 330 days. This has 2 days to go, 2 days, 702 days. Here, we could expand this to 100 of these. So you could see here that lots of different combinations, different expirations, different distances between the strikes. It's really, in different strikes, actually, some strikes are like, in the money, some are out of the money. So you have lots of different combinations here. Okay. These are just trying to help us out with what's going on. What was so this 9,700, what was the spread itself traded for 7 cents, and it's wide. It was no bid. This means no bid at 27 cents. I mean, the market in these are pretty wide. I think there was an error when I tried to open it, Will. So let me try it again. I think that was the error. So I got it. Yeah. Okay. So, okay, there it goes. All right. So here you could see 2,230, it's a lot of trading. Look, 7 cents, 7 cents, 7 cents, 7 cents. You could see on Amex, Arca, Edgex, Arca, it just continuously just traded 7 cents, right? There we go. I'm just going down. It's not necessary to look right now at all these. It looks like 4, it traded 1, 1, 1, 1, 1, like that. Okay. Did trade historically 3 other times. So let's just take a look if that shows up. I'm going to sort. I should auto sort this like this, but traded February 8th, 7th, and 5th for 7 cents, 7 cents, and 20 cents here, February 5th, 508 times. It's a little bit weird. I don't know what's going on. If like somebody tried to do it one time, look at it, and then said, okay, now I'm going to do 9,000. I don't know. That's a little bit weird. Looks like 500 traded contracts February 7th, for 7 cents. Then February 8th, it traded again, one trade, 4 contracts, so it's just one time. And then all of a sudden we see this big one, 9,704. So that's basically how this traded. And we could see that the stock itself is way above these strikes, right? So if you're buying the call 185, selling the 190, and buying the 195, well, your sweet spot is 190. That's your sweet spot, right? That means that, let me just open this up. That means that you wanted to stop right at 190 at expiration, because that's where it's worth $5 the most, the max. Because if you're long the 185 call, stock goes to 190. Well, that call's worth $5. If you're short the 190 and it closes at 190, both those expire worthless, and the 195 call expires worthless, so it's going to be worth $5, right? However, if it's above 195 or below 185, it's worth 0, right? Because if it's below 185, well, all of those calls are worthless, so it's worth 0. And if it's above 195, well, what happens is that you made $5 from the 185 to 190. And then, well, I'm sorry, if it's above 195, sorry. From 185 to 195, it's worth $10, right? Because the call spreads from 185 to 195, it's worth $10. But, from 190, you have 2 of these. From 190 to 195 offsets that $10. So it's worth 0. Plus 10 minus 10, 0. So it's I'm just looking at the open interest, and this may be look at, how the open interest is almost, proportional to the butterfly. To me, this may indicate, and we could go look at the open interest, we could go look at today's open interest. To me, this is indicating that perhaps a spread that was initiated a while ago just because of their open interest is perhaps being taken off, slowly taken off. That's why we're seeing maybe earlier than our history. Because remember, our history right now is going back, it's only going back 10 days. So that's why we're probably, when this initially was put on, it could have been back further than 10 days. We're still backfilling it because it's a new tool. I kind of pushed it out earlier because I wanted to do it in a webinar on Tuesday. However, I'm just looking at, we're past 9:30. Will.
Yeah,
Sorry.
no, I was waiting.
Okay.
No worries. Maybe we can relook at this NVDA trading tomorrow, see what happens today. We did, Jackie had a question about the single leg, multi-leg buttons. He's not seen on some of the stocks. I asked him to let me know, maybe email. He didn't let me know in the chat. Jackie, maybe email support@MarketChameleon.com where you're seeing that there are no single leg options in certain stocks. I don't know why that would be. That button isn't there, but email us with a screenshot if you see it. Awesome job, D. This was great. Thanks.
All right. Thank you, everyone, for joining. Stay safe out there. Have a great trading day, and hope to see you tomorrow, right? Friday, tomorrow.
Awesome.